The best loser wins. Why most traders lose and how you can too?
Most people enter trading thinking it's a game of charts, patterns, and indicators. That if you can just figure out the right setup, perfect moving average, or the magic candlestick pattern, money will start flowing in. But the truth is far more uncomfortable, because the problem isn't the system, it's often the trader. That's the hard lesson Tom Hugard delivers in his book Best Loser Wins. This isn't another book teaching you how to read RSI or Bollinger Bands. In fact, Hugard argues those tools are what keep most traders stuck. Not because they don't work, but because they become crutches. Distractions from real work, mastering your own psychology. In the beginning, Tom was like everyone else. He obsessed over technical analysis, printed thousands of charts, and drew lines and levels until his eyes hurt. He chased every indicator he could find, from Fibonacci ratios to Bollinger Bands to obscure pattern theories. In the poetic opening of his book, he even describes his early pursuit of the market like a love affair, trying everything from Keltner channels to arcane methods with names that sounded more mystical than practical. He was consumed, convinced there was a secret code waiting to be cracked. But none of it worked. Not sustainably, not consistently, and certainly not profitably. Because the market doesn't care how many chart patterns you know. It doesn't care about your education, your work ethic, or your passion. The market rewards one thing above all else: your ability to control your emotional reactions.
That's an interesting way to put it. I wouldn't have put it that way. I would say the market rewards your ability to control risk. Now, as a trader, that makes total sense to me. Like, I understand that. But a lot of people who come into this world, and maybe you're the same, right? You might be thinking it's all about how much money can I make. It's really not. It's really not. It really is all about how much risk am I willing to take to find out if I'm going to win on this trade, right? It's akin to going to the casino and putting it all on black, right? It's akin to going to the casino and putting $100 bill on black. Here, I got a $100 bill handy. Let's say that I go to the casino, I take this $100 bill and I put it on black. Now, as time goes on, as the wheel is spinning on the roulette table, less and less red starts showing up. And you're like, oh, cool, it's getting closer to black. I'm about to win. And then all of a sudden, everything turns red. And you're like, you know what? Never mind. And you pull that out. I mean, it really is like that with trading. You can see if it's working for you well in advance. And when I say in advance, you don't have to let it crash. We've seen so many stocks do that lately. So many YouTube channels who look like absolute fools because they're pumping these stocks that have just gone down 15, 20%. And then they continue to go down another 15, 20%. And they're like, it can't go any lower. You got to buy it. No, for sure not. You can place your bet. Larry Hite, one of my mentors, the very first $1 billion hedge fund manager, he says, in order to win, you have to bet, right? But you can't bet if you've lost all the chips. So you can't play if you've lost all your money, and you can't win unless you bet. But after every bet is put on, you can see day by day, hour by hour, minute by minute, if it's working for you. And if it's not, you can pull your money off the table, and you might not get all 100 back. You might get 98. You might get 98.9. You might get 95. You might even get 90. But you're not going to walk away with zero. That is the difference in a successful trader and everybody else. Because everybody else thinks it's Lambos or food stamps. It's not Lambos or food stamps. It's how much risk am I willing to take to find out if this is going to work. And I'm only going to give it this much to find out. If it does, by all means, let's stack paper, right? Let's see how many of these bad boys we can pick up, right? If it doesn't, that's fine. You just move on.
Hugard doesn't claim to be the best analyst. In fact, he admits his technical knowledge is average. But what makes him elite is his mind. He's trained it to lose without spiraling into fear, frustration, or revenge. He doesn't flinch when a trade goes against him. He doesn't fight the market. He flows with it. That's why he says the best loser wins, because every trader will lose, but very few can lose well. Most will panic, freeze, overtrade, or worse, try to impose their opinion on the market. They'll see a stock crashing and say, it's cheap now. They'll see a breakout and say it's overbought.
Yep. This is exactly, oh, hang on, my cursor's not on there. There we go. This is exactly what we have seen in the finance YouTube space for months. It can't go any lower. It has to go up from here. And now that we're on the other end, oh, it's overbought. I can't buy it now. Right? SMCI was up like 30 something percent before we bought it. We're profitable on the trade. Palantir was up so much percent, and then we bought it. What was it? It was Hood. Hood was up how much percent, and then we bought it, and it continued up higher. Datadog. It was up how much percent, and we bought it, and it continued higher. Right? You actually want to buy stocks as they're crashing up. It sounds counterintuitive, but winning traders buy high and sell higher. Losing traders buy low and sell lower because they have no idea what they're doing. Now, in the last week, you have seen what winning trading feels like. You have seen what winning trading looks like. You have logged into your account and seen winner after winner after winner after winner. And the small losers that have been there, what do we do with them? We got rid of them. And the winners stay, and we let them run. That's what it's supposed to look like. You log into your account full of winners. If there's a loser, you bounce it out, and you look for somebody new. I hope that last week, since last Friday to today, I have made life-changing money. I hope you have too. And it wasn't on accident. It was following the plan and sitting in cash for weeks and months and not effing up, and then you get paid all at once. Now, in those 2 months, 3 months, when you're not doing anything, instead, you decide to go gamble on a stock that's going down. Like, it can't go any lower. It has to go from here. You throw your trading plan out the window and you go gambling. You're going to have less money to trade with. And then when the big moves come, you probably won't have any chips left. And if you do, you're going to have a lot less chips to play with. So you won't be able to bet as big. So you won't be able to win as big. I really want you to just take into account, this was the single greatest week of trading I've had in maybe an entire year, maybe longer. I don't know. Maybe ever. But it was by design. It was by design to be there when it came, ready to go. Can you say the same for your plan?
They interpret the market through their feelings and not its reality. And that's where most fail. Because the market isn't a supermarket. A stock dropping 50% doesn't mean it's on sale. It could mean it's heading for zero. Tom learned this lesson the hard way when he warned clients not to buy Marconi stock, which had already fallen from 1,200 pence to 450. He called it garbage on live TV and was fired. Later, the stock hit zero, and those clients lost fortunes. Still, this mindset of seeing what you want to see is what drives most traders. They look at an indicator like stochastics or RSI, and they think it's telling them what will happen. But it's not. It's just data, a reflection of the past. Hugard tells the story of a student who bought the Dow Jones at the end of a brutal down day. Why? Because stochastics showed it was oversold. But the market kept falling. There was no bounce. That trader wasn't following the market.
Yep. Right. Whatever indicator you see, it doesn't matter because price rules everything at the end of the day. And if price continues to go down, whatever indicator you see down here telling you it's oversold, it means nothing if price is going to continue to go down. It's just going to take you out. Oh man, this is great.
He was following his hope. And hope is not a strategy.
Oh, that's a good one. My new patented one, which shall be trademarked, is should is not a strategy, right? Going back to this, it should go up from here, right? It should go up. Unfortunately, you have no control over the shoulds, and hope is not a strategy either. Well said.
And hope is not a strategy. The real battle in trading isn't against other traders. It's against your own biology. Your brain is hardwired for survival, not speculation, and it wants comfort, certainty, and control. Trading offers none of these. It offers risk, randomness, and emotional pain.
Oof, well said. And this is what I talk about constantly, right? When you've made, I don't know, 1% on your trade, and you're like, oh man, look, I made an extra $20. I need to take that off. I need to take that off right now so I can have the comfort of knowing that's in my account. The certainty of the fact that it cannot be taken from me, and the control over, you know what? I got this. This is mine. Whereas what's so hard and why people fail is they don't understand the risk. They don't understand the randomness that, and then this is why I say don't focus on the outcomes, because the outcomes are random. Meaning, you don't know if it's going to be a big win. You don't know if it's going to be a break even. You don't know if it's going to be a small win. You don't know if it's going to be a small loss. But you better be damn sure it ain't going to be a big loss. And you can control that when you get out. But the only way you're going to be able to do that is if you get through the emotional pain of taking those losers. This is exactly what you need to be able to do in order to be successful. And it's hard. That's why 90% of traders lose 90% of their accounts in the first 90 days of trading. What we are doing is not possible without a lot of introspection, without a lot of personal development in order to take those losses and wait and wait and wait and then pounce and go big. I told you guys last Friday, I had to have a little talk in the mirror with myself because that was the biggest trades I put on ever. I was like, all right, Chris, you ready? You can do this. All you got to do is follow the plan. A little pep talk to myself. If I still have to have a pep talk with myself when I'm putting on big trades, it's okay if you still have a pep talk with you. It's totally fine. But the pep talk needs to be, I'm going to follow my plan, not, oh man, think of how much money I'm going to make. What color Lambo am I going to buy?
So most people react exactly as evolution designed them to. They avoid discomfort. They cut winners short to lock in gains, and they hold losers too long hoping they'll bounce back. They trade more when they're losing, less when they're winning. They think like humans, not traders. Hugard flips this logic on its head. He doesn't seek to feel comfortable. He seeks to become comfortable being uncomfortable, and he doesn't try to avoid fear. He trains himself to operate in its presence. He's like the Navy SEAL of traders, calm under pressure, trained to perform when every instinct says run. This mindset is especially critical when you're in a slump, a brutal, drawn-out period where nothing seems to work and confidence vanishes. Hugard dedicates an entire chapter to this, trading through a slump, and it's one of the rawest, most honest parts of the book. Because slumps are not just about losses, they're about identity. You start questioning everything, your strategy, your skills, and even your worth. Tom describes the pain vividly, the self-doubt, the desire to fix things by changing systems, increasing size, and chasing every new setup. But that only deepens the hole. His advice during slumps is both simple and brutally hard. Stop trying to trade better. Start trying to think better. Reduce size. Go back to basics. Trade small. Journal every thought. Focus not on outcomes, but on execution. Because in
Never heard that before.
a slump, it's not the market you need to conquer. It's yourself. He admits that during his worst slump, the temptation to quit was real. But he didn't. Instead, he studied himself more closely than ever. He realized that slumps are the ultimate test of discipline, not skill. And when he emerged, his edge wasn't stronger. He was. And here's where Hugard's approach becomes radical. He believes that normal thinking will always lose in trading. Why? Because normal means emotional, reactive, and hopeful. It means trading the market as you wish it were, not as it is. That's why he says trading success starts not with learning a system, but understanding your instincts. The goal is not to find the perfect edge. The goal is to become the person who can execute any edge with discipline, detachment, and consistency. As Charlie
Wait, you mean follow the rules with consistency and discipline? No, surely he didn't just say that. Did he just say, I always say you could publish rules in a newspaper and nobody follow them because they don't have consistency and discipline? It's real.
Francesca, the legendary bonds trader, put it, good trading means combating the emotions that make us human. It's less of tools, strategies, or indicators, and more of psychology. One of the most revealing stats in the book comes from a massive broker study. 43 million trades were analyzed, over 60% of them were winners, and yet most traders still lost money. Why? Because they lost more when they were wrong than they made when they were right. They cut their winners and held their losers. This isn't a strategy.
And this is the common thing. I know you've been there. You've taken the trades early off because you're like, oh man, look, I got a couple dollars of profit. I need to go ahead and take it off, right? I got a couple dollars in profit. Let me go ahead and take it off, right? Let's say you got out right here, but then you missed the bigger move, right? You got the $4 move, but then you missed the next $10 move on top of that. Why? Because you were nervous. You were scared that those profits would go away. Rather than waiting for the market to tell you it's time to get out, you said, oh, I better take it while I got it, right? But then on the opposite end, maybe you bought it up here, or yeah, I should really say down here, but up here at the moment. And then it went down and you're like, that's okay. I like the stock. I'm a long-term investor. I believe in the company. and then it's gone from 136 to 118. And you're like, that's okay. I believe in the company. I like the CEO. I know that their fundamentals are great. Their earnings per shares or whatever. And it's continuing to go down and down and down and down and down. So you took your $2 win right here, and then you decided to take a, let's say 136 to 184. Goodness gravy. Take a $50 loss on this side. That is so common. That is more common than you would believe. So if this has happened to you, I don't want you to feel bad about it. I don't want you to be upset about it. I want you to realize you were normal. You were normal. But you aren't anymore. Imagine I'm your Gandalf. You're my Frodo. And I have handed you the staff. And I told you, listen, the only way you're going to go climb Mountain Doom and throw the ring into the fire is with the plan. The plan is following the Outlier Nine. The plan is knowing when the direction is working for you. And the plan is also knowing when to cut your losses and get out of the way. That way they don't hurt you and let those winners run out of control, unlike your losers. So if this has happened to you, you're not broken. You're not messed up. But you're not going to do it anymore.
Strategy problem. It's a psychological one. Hugard also points out how brokers try everything to help their clients win. They offer tight spreads, free education, and advanced tools, yet still 80% of retail traders lose money. Some brokers even wish their clients would win, because winning clients trade more and longer. But the numbers don't change, because no amount of tools can fix a flawed mindset. That's why Tom's message is clear. If you want to succeed, you have to stop being normal. You need to build mental models that are abnormal by everyday standards. That means holding on to winning trades longer than feels comfortable, cutting losers before they turn into disasters, sticking to your rules when your brain is screaming to break them, trading small enough in stress that a loss never rattles you, journaling not just your trades, but your emotional state. He even trains with breathing exercises during trading to stay centered. He reviews not just entries and exits, but also why he made those decisions.
Literally exactly what I tell you to do. Journal everything, right? Have whatever trading journal it is, spreadsheet, paper, doesn't matter. Write down why you got in and why you got out, all the details that you can keep up at the meantime. And then at the end of the year, at the end of the month, the end of the week, whatever, you can look back and you can say, this is what I did. Why? How did that help me? You know what? Maybe I could adjust my rules slightly and then be better off next time. Yeah, it's so much about psychology. It really is, Mike.
He builds self-awareness the way others build strategies. And the results speak for themselves. At one point, he went 39 straight trading days without a loss, making over £300,000. Not because he had a crystal ball, but because he had control. He didn't need to be right. He just
I'm just saying, you don't have to go 39 days to make that kind of money. I'm just putting that out there.
needed to execute with precision. The takeaway isn't that you need to become a robot, it's that you need to become aware. You can feel fear, but don't act on it. You can feel greed, but don't let it take the wheel. Trading is simple, but not easy. The rules are clear, but the execution is brutal because it pits you against your own programming. And that's why Best Loser Wins is such a powerful book. It isn't about indicators or secrets, it's about transformation, not of your strategy, but of yourself. Tom says, I win because I'm really good at losing. In trading, unlike life, it's the best loser that wins. Do you think a dentist or a doctor would be in business if they had a 60% win rate? Of course not. But a trader can thrive and prosper on that kind of success rate, as long as they are prepared for it. Most are not. Though Tom Hugard is a successful high-stakes day trader, don't be mistaken. His insights on trading psychology go far beyond intraday charts and fast execution. The mental challenges he explores are universal, whether you're swing trading, investing long-term, or trading options. Fear, ego, hesitation, and overconfidence show up in every time frame. What makes Best Loser Win so powerful is not just the diagnosis of these mental pitfalls, but the detailed prescriptions Tom offers to overcome them. From breathing techniques and journaling routines to thought training and mental rehearsals, the book gives you practical tools to reshape your internal responses.
Okay, I'm going to give you some practical tools now. Is that all right? Is that okay? Type tools in the chat if that's all right with you. Type tools in the chat if you would like me to give you some tools to help with that. First, whenever you're looking to put on a trade, I want you to think about these 3 things. Number 1, there's no outcome or no expectation for the outcome. Because I don't know what it's going to be. I have no idea what it's going to be. And if I am telling the market how much it needs to give me, the market can look at me and say, what are you talking about? You are so dumb. I'll do what I want to do. You get to come along for the ride, or I'm going to run you over. But you ain't telling me anything. All right? Do not set expectations on the outcome of the trade. Don't have profit targets. Don't say I'm only going to get out if it hits $50 and it's a $40 stock. That's a 20% move, 25% move. If it never hits the $50, are you saying you will never get out? Or are you confident in your strategy enough to say, okay, listen, this is dead money. I need to move on. And I'll catch it back next time when it goes from 40 to 41 and it's looking like it might actually go up to 50. Then I'll start to come back. But if it's not doing anything, I'm not going to just sit here for years. No way. That's stupid. I'm certainly not going to hold something going down because I am so dead set on this profit target that I established that the market cares nothing about. Then lastly, have a plan to get out when one of your exit signals happens, right? First, have a reason to get in. But second, more importantly, know where you will get out before you get into the trade. Before you get into the trade, know exactly where you're going to get out. By doing these, you're going to be ahead of so many people. It seems simple. It seems so simple. But can you actually say that you do this? Right? And then the other tool I want to give you is a position sizing tool. Here. Now, this is so critically important. Right? I had a losing trade in Apple this week. Big deal. It hurt my portfolio 0.74%. Less than 1%. So I had $99.26 left over for every 100 I had in my account after that point. But then I also had some winning trades that grew my account by 9% and almost 10%. You see how much bigger the magnitude was on the winning trades than it was on the losing trades, right? 10 times greater on my winning trades than on my losing trades. Significantly greater. And so by focusing on this position sizing, you can take in giant positions, humongous positions that you would think, wait a minute, this is way too big. But you do that understanding how much volatility there is with the stock. Because you can't trade Coke and Tesla with the same 25 contracts because they behave very differently. There's no good reason to do that. So this is my formula for position sizing. And I want you to copy it by all means. It just makes life so much easier. And then stop loss point. Have a stop loss point. I have one stop loss point, half an ATR from entry. Everything else on here is how I'm mitigating profits. Every other thing on here is how I'm going to make sure that I get out profitably. One stop loss point. Half of an ATR from entry. Now that's really tight. Some people would say that's too tight. But the tighter your stop loss is, the bigger positions you can take. But maybe your win rate's lower. Right? So you need to try to figure out where that balance is. And I need to balance taking off some trades. So let me do this real quick. My name is Christopher Uhl. I've twice been awarded top 100 people in finance. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where outliers like us save time, make money, and start winning with less risk together as a team. So go ahead and subscribe if you haven't already. And real quick, before we do some trading, let's go to our member highlight over in the Discord, because today is my favorite day of the week. Today is Friday, and you know what that means. It means it's time for the weekly winner circle. That's right. Over in our Discord, we want to hear from you to share your big wins. And we have had the best week ever. This has been swamped with people like Phil right here, Datadog, 57%, Uber, 62%, Meta, 89%, Palantir, 95%, GM, 37%. Hood, he can't even count that high. Outstanding. And this is the story all week long. All week long. Hood up 48%, GM 31, Palantir 83, SMCI 22%. All week long. Feels like I'm playing in the minor league, right? But everybody else is making so much money when he's only making 20%, 14, and 4%. Let's see. APLD, that's from our friend Dave, up 72%. This week has been a privilege to be an active outlier. Let's see what he's got over here. 76%, 28%, 38% right there. I'm so proud of you guys. This has been a absolutely tremendous week. Ozzy Ian, 68%, Hood, 61%, Rocket Lab, 25%, and then Apple, -8%. That's how it's done. Look at how his one loser is 6-8 times smaller than his winners. This is how successful trading is done. And we have so many people sharing their wins this week. Yeah, like Pete right here, following the plan. That's how it's done. 15% account growth in a single week. So Pete could take the next 2 years off. Pete could sit on the beach for the next 2 years and get pretty much the same gains on average that the market would give him. Outstanding, Pete. Outstanding. Congratulations to you and to everybody else. Now, here comes my favorite part. Everybody who posted in there is now entered to win a $10 Amazon gift card for us to say thank you. And this is so much fun to me. Now, if you can believe it, 90 people posted in there this week. 90 winners this week. How cool is that? How cool is that? So we're going to break this up into 4 different groups of 22 and a half. Actually, it's 3 groups of 22 and 1 group of 24. So I'm going to give out 4 $10 Amazon gift cards. How does that sound? And you don't have to be here live to win, but it would be really cool if you did. It would be really cool if you were here. So we're going to go to random.org for the most random guy on the internet. And we're going to type in the first group here from 1 to 22 and see who the winner is. In 3, 2, 1, the winner is number 15 of the first group. That is Sue, a girl. What? 91% of our audience is men. I just checked that yesterday. 91%. So that means 8.5% of our audience is females. And congratulations, Sue, you are a winner. You are a winner. Next, we're going to start at 23 and go to 44. So 23 and 44. And in 3, 2, 1, number 28 is the winner. That's Dave. What's up, Dave? Congratulations. Dave is one of our Outlier University students, and that's how you can tell that that was not chosen on purpose. Congratulations to Dave. Next, let's do number 45 through 66. 45 to 66. And 3, 2, 1, number 53. That's Danny. Congratulations to Danny. And our last group here is number 67 to 90. 67 to 90. In 3, 2, 1, number 69. Of course, it'd be number 69, right? That's nice. Hey, Chris P, congratulations, my friend. So congratulations to Sue, to Dave, to Danny, and to Chris P. All of you guys are winners, but those 4 get $10 Amazon gift cards. So congratulations to you and everybody. This is so much fun. This is so much fun. Don't you guys have so much fun doing this, right? It is such a privilege to be able to help you save time, make money, and start winning with less risk. So at Dave, he goes by David now. Yeah. Because he's fancy using his full name like Christopher. I understand that. And then there was Sue. And then there was I forget, Crispy. And lastly, it was Danny. Congrats to you 4. You're the winners this week. So April will send you a $10 Amazon gift card on Monday. Congratulations to all 4 of you. And congratulations to everybody who's an outlier. It has been a tremendous week. Now, with that out of the way, be sure you share your stories in the Discord. And of course, the first rule of Outlier is to tell everybody about Outlier. All right. So let's do this. What is Outlier and how does it work? Remember when old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful? Well, Outlier shows you if investors are acting irrationally fearful or greedy and by how much, allowing you to get into the stock before the Outlier move happens. Now, if you're ready to save time, make money, and start winning with less risk, like all these other winners, be sure you head over to outlier.com, pick up the annual pass for just 82 cents a day. It's 64% off the regular monthly price. And if you're on the monthly plan, you really should upgrade. Just telling you, you're going to save so much money. It's going to make it so much easier. Now, my style of trading is called the golden ticket trading strategy. So let's go start with the top and work our way down with the market. And if we go to the SPY, hang on, I need to go in Outlier first and then the SPY. Right, so we're going to look at the Outlier 9. The Outlier 9, the trend, the signal, and the breadth on the market. Oh, in fact, let me back up real quick. This is how I evaluate every stock. This is 9 itty-bitty baby steps that I'm calling the Outlier 9. So the market is 40% of the move. The sector is 30% of the move of the stock. And lastly is the 30% of the stock itself. So we're going to go through each of the 9 itty-bitty baby steps and know where we are on these stocks. So first, let's look at the market trend, right? So the green overlay tells us that it is in a bullish trend. Your 10 over 20 price over the 50 trend template is green. It's bullish. Next is the signal of the market. We can see right here, we got a buy signal. Isn't this little handy yellow cursor so nice? I am so glad Steve recommended that. Thank you again, Steve. And then the breadth of the market. This has been quite contentious this week. Quite contentious this week where market breadth is at. Because as I mentioned, on Friday, it had a very, very high cycle, meaning it went under, came back up, and back over. Now, if we zoom all the way in, we can see it is not crossed. It's real close, but it ain't crossed yet. It is not crossed yet. Because of that, this is still technically bullish. I'm just putting that out there. Next would be the sectors. If we look at the sectors here and get out of the way, we can see there's a handful of some that have not quite crossed over bearish yet, but they are weakening bull. Weakening bull. Now, I'm in the discretionary and I'm in the tech sector. So if we look at these in more detail, we can see they have not crossed the 10 EMA yet, but they're certainly not getting higher. They are getting lower. Now, what is this breadth measurement measuring? It's measuring how many stocks are on the bull list. Let me pop that open here. The bull list with buy signals versus the sell list with sell signals. We can see 61 new buy signals today, 85 new sell signals today. That's what we're measuring, is how many stocks are in each sector or in all of our catalog that we cover, and how bullish that sector is. How many buy signals versus sell signals. Tech sector peaked at 92.51, but it has not crossed this line yet. And then the discretionary sector, taking a look at that, still has not crossed that line just yet. So my rule is if both of them cross over, if the market and sectors cross over to close the trades. That's not what we see yet. We actually don't have crossovers on those. But the market breadth is weakening, right? It went over 75 and we're no longer putting on trades. So I've halted trading until it cycles again. I'm buying as long as it's increasing. I'm holding it if it contracts. And if both the market and the sector crossover, I'm selling. That's my rule of thumb there. So we understand the breadth that we've been looking at. Now let's go look at the fear and greed. We'll look at these stocks that I have on today because we need to work on those real quick. So there's Palantir, GM, and SMCI. I own all three of these right now. So let's start with SMCI. All right. So if we zoom in on SMCI, right? Remember the Outlier 9. The trend, the signal, fear and greed, and order outlier blocks. So the trend, green, bullish trend. Signal is a buy signal. See how quickly we can run through those itty bitty baby steps? Buy signal. Okay, next, the fear and greed for the sector and the stock. We can do them together. The sector is right here. You can see the fear is going away, getting lots of greed. For the stock itself, it's gotten no fear at all, and now it's getting more greedy. Outstanding, right? And then lastly, any outlier blocks in the way of SMCI. We do, but they're way up here at 55. If it goes up from 45 to 55, I'm okay with that. Chris will be a happy camper. So any other reasons to get out? Sell into strength at 63. This is one of my exit signals here. Sell into strength at 63. On SMCI, the current heat map value is 55.35. You can see that number over here, 55.35. So for me, I don't have a reason to get out. I'm going to hold SMCI through the weekend. Let's go to the next one. SMCI stays on. Let's go to the next one. Palantir. So let's do this again. Trend, signal, fear and greed, outlier blocks. Trend, bullish. Signal, buy. Fear and greed, moving up. I hit a value of 72. Keep that in mind in a moment. 72. And any outlier blocks on Palantir? No, none out there. I was hoping for an end of day run on Palantir. Did we get it? We did, but it's not really going anywhere. All right, so for me, I am going to get out of Palantir because I had said before I put on the trade, I would get out when it hit 71 on the heat map. And today it's at 72, I think. Yeah, 72. Now, where did I get that number from? For my exit strategies, I'm looking for a 10-point spread on the heat map after I've gotten in. So the buy signal came when it was at 61.97. It went up, it went up, it went up, and we jumped right over 71 and went to 72. Okay, so this is a sell signal to me. Now, give me just a moment here. I forgot to log into Tradier, and we're going to take off Palantir today. 2 seconds here. I got to log in. And no, you can't steal my username and password. I know that's what you were trying to do. All right. So we're going to jump into the paper trading account. Another suggestion from Steve is to start using the paper trading account, which we will start as soon as we put on new trades. That way you guys can actually see it getting filled and see it coming out. Right now, I have my business account on the other screen. I will never show you that. It's just a fact. I'm letting you know right now, but I don't mind doing that over here. So let's look at Palantir. So I currently own, what do I own? The May 23rd, 122 calls. So I would do a sell to close in this instance. So I would sell to close the May 23rd, 122 calls. Now, that's what I'm going to do. It's not what I would do. So let's see where we can get filled at. Close position, full position. I'm going to start at 8:30. That was not a brilliant fill. Why was I filled at 8:30? I don't know. Could have been more like 8:55. Did I do something wrong? May 23rd, the 122 calls. I don't know why it shows 8:50, 8:60 over here, and I got filled at 8:30. That's part of the game. Can't do anything about that now. It's just over. So sometimes you get great fills, sometimes you don't. I did not in this case. That's okay. So let me go over here and put in that I'm out of Palantir. Hold tight. Let me go to where I rolled it. By the way, Palantir had been rolled so many times, so bigly, that I had absolutely no risk in the trade. Here we go. Absolutely zero risk in the trade. So every bit of this is profit. Okay, so I closed it at 8:30. Let me fill in my spreadsheet real quick. That'll tell me how much I made, because it was a lot. Palantir. So 8:30. So I rolled it for 1207. I'm closing it for 8:30. So the combined value of the two is 2037, and I bought it for 1170. So the difference between where I sold it for at 2037 and 1170 is a 74% gain overall. I'll take it. Okay, so today is the 16th. Trade number 1. Close Palantir. 523. 122 calls for 8:30. And the reason being was my heat map target was hit. And this did what to my account? It grew it by a 4.85% account impact. Wait, hang on. I didn't put the gain on it. Hang on. That was a plus 74.08% win. Right? Now, position sizing is so important here, right? And this is why I like to give perspective. Even though it's a 75, let's round it, 75% win, it grew my account by 5%. The one trade grew my account by 5%, even though it's a 75% win, because of position sizing, okay? Because if I were wrong, I do not want to have a 75% loss on my entire account. That would ultra blow. That would blow so hard. Okay, so we are done in Palantir. And let's go to the next one. Next one, final one, is GM. So let's go through here. GM, it has a bullish trend, has a buy signal. Getting more greedy, the sector's getting more greedy. Looking at the greed values at 63. When I got in, the greed value was at 53. So that's a 10-point spread, which is my rule, a 10-point spread on the heat map. So as I mentioned right here, when it gets to 63, I will exit. I know where I'm going to get out before I get in. We see a pattern here, right? We see a pattern here. All right, so moving. Oh, daggum, Palantir's now running, isn't it? That son of a gun. I knew it was going to do that. I said that earlier. I literally bought, so son of a gun. I told you it was going to do that. Now it's up 40, 50. I hate this guy so much. I can only take so many profits out of it. Damn it. It's all right. All right, so back to GM. Actually, is GM running? Can we give that guy another couple minutes? No, it's not doing anything. Son of a gun, Palantir. All right, back over here. GM, I need to close GM. No mo FOMO. I know, Mr. Dave. I'm just joking. No mo FOMO. I can't do anything about it anyway. Okay, GM, I need to close the 47 calls on May 30. May 30, 47 calls. Right? Yeah, 47 calls. And currently valued at, hang on. It's like frozen over here. Is all of my internet frozen or just this? It was just that. Okay. May 30, GM, May 30, 47 calls. It says 355 right here. Let's see if we can get 355. Close, full. I'm not going for 345. I want 355. Filled at 355. Thank you very much. I just got a bad fill on that last one. That's okay. So out of GM at 355, made up those few cents. Maybe I made up those few cents, and that's okay. That's part of the game. So I'm out of GM at 355. Let me find my GM roll, and let's see, where's my GM roll? 2 seconds here. Good. Okay, so we didn't roll here. Hold tight, hold tight. There it is, GM roll. So we're going to reply, come down here. Trade number 2. Close the GM. 47s, right? Yep, 47s. 530. 47s. For 355. And the heat map target was hit. So if I pull up my spreadsheet real quick, 355 gives us, okay, 355 plus 355. Yeah. So I rolled it once at 355, rolled it again at 355, giving me a 49% return. 49.43% return. And that grew my account by 6.19%. Account impact. Very cool. Now, the only trade that I have left is SMCI, and I have not rolled that yet. I'm not going to do anything with it yet, but I do want to show you where this is putting me at with one trade left. So if we go to SMCI, I'm in the SMCI 38 calls on June 6th. June 6th, 38 calls, which is currently valued at 885. I paid, how much did I pay for that? 834. So it's 885. So small winner on this one right now. This is where I'm at for the year. This is where I'm at for the year. 32.72% gain with one open trade left. This is how it's done. This is what it's supposed to look like. You don't do anything for ages and ages and ages and ages, and you get a small win, and then you go ages and ages, and then you get a lot. 12 trades, that's it. 12 trades, I've made 32% return. Annualized return, 114%. I want to see if we can beat that. Average win, 45%. Average loss, 19%. 66% win rate with a proven edge of 24%, meaning every trade that I put on average, has returned to me 24%. That's what that means right there. Martin K says, can you explain the heat map target stuff? I'm not getting it. For sure, Martin. Check it out. So I'm done trading for today. So looking at this, it's not going to take any extra time away from me. So I'm good for that. Let's go back to, we'll go to Palantir. So the buy signal came when the fear and greed rating was at 61.94. Do we see that? Now, because this was moving up, that's what we want to see, right? It moved up, moved down a little bit, and then started moving back up again. Huge move that came from that. Giant move, tremendous move. Now, in my plan, I get out with a 10-point spread on the heat map. So here, it shows a 61.94, meaning I would get out at 71. Today, it's at 72.0. So it skipped right over 71, went to 72. So it went 61, 65, 69, 72 in that order. Okay. Now, is this the very top? Unlikely, but it could be. It could be. That son of a gun is continuing to run. That's okay. It could be. Or I'm just getting out, following my rules, and I'm not going to stress on it. So there's no stress on this. There's no stress on this. One thing I do want to point out, though, is the further it gets, let's go to the 1 year time frame. The further it gets really high or really low, the more likely you are to see snapbacks. Like right here's a great example. It got super low, super fearful around 13, and then giant snapback, and then another snapback, right? Huge snapbacks happen when it gets really high. Right here, it was hitting a 92 on the heat map as it was hitting this really close to the high. Got a sell signal on February 14th, like 1 day before that high sell off right there. So the objective here is to capture the stock as it's going up in greed and get out before the greed snaps back at you. And you can't get that data just by looking at the charts. It's impossible. This data goes beyond what's in the charts to give you that fear and greed. The question was, why did I think it'd run at the end of the day? I'll tell you why exactly. So a lot of people love trading Palantir, and a lot of people trade on the weekly charts because it's on a, oh my gosh, I'm so annoyed right now. Shut up. I can be slightly annoyed at this guy. It's like 80 cents off. Because a lot of people trade weekly charts and they're looking at it like this, they're like, oh, look at this. It's really starting to show a lot of move. I think I'm going to buy it at the end of the week. So not a surprise at all. And then all of the mutual funds, the hedge funds, all the institutions that are buying, they're going to start buying in the next, or they started buying about 10 minutes ago. So they have about a 15-minute window to do all of their weekly moves before the end of the close. And so it's all working together, right? Shoulda, coulda, woulda. I know. And SMCI, is it running? Oh yeah, sure is. At least I own that one. At least I own that one still. And I will continue to own it until I get an exit signal. So we can hang out for just a couple more minutes and I can answer any questions that you have, maybe help you out in any way, right? Now listen, I don't have to do this. I choose to do this. I love to do this. And I feel like I am blessed beyond belief that I get to help you save time, make money, and start winning with less risk using Outlier, right? I have shown you the processes of using Outlier 9. I have shown you how important it is to sit and wait in cash for weeks and weeks and weeks. And then you can get paid all at once. You can literally make your entire, you can literally make the entirety of your gains in 1 week for the year. The entirety of your gains in 1 week for the year. But you have 51 other weeks to not mess it up. You have 51 more weeks to go before we get back to this week next year. You can either sit on your gains, you can wait for the next ones, or you can jack it up. Okay. So let me see how I can help you out. Manny says, we love that you do this. Oh man, I love that we get to do this too, Manny. This is like, as you can't, I'm sure you can tell. Like, I love this. I love this, love this, love this. Hang on. There was a question from a girl. Amy, this is not the first time I've seen you here. You are now a regular viewer. Amy, you are now an outlier. Thank you so much for being an outlier. You said you had been using this system for a few years now. What were you doing differently in 22 your portfolio is down. Can you talk about your losing your outlier? So honestly, it was not Outlier at that time. There is another function, another program that we were using called FinClub at the time, also created by Mark and Mahesh. And while it works, it's nothing like Outlier. Outlier is like millions of miles better. Not necessarily that it was bad. It's just Outlier is unbelievable. Also, one thing that took me some time is figuring out how to trade with it. Now, I'll give you a perfect example. I'll give you the perfect example, Amy. These sell signals in uptrends. Yeah, these sell signals in uptrends. I was so stoked every time I'd see a sell signal in an uptrend, like this one right here, that I would sell short. Let me zoom in on this a little bit more. I'm telling you, this was my downfall during that time. That anytime I'd see a sell signal like this, I would sell short and I would get monkey hammered. I would get destroyed. And so I was like, wait a minute, I'm doing something wrong here. I mean, I lost quite a bit doing this. And I had to take a step back and I'm like, why am I selling short in an uptrend? Is it just because we got a sell signal? Hold on. That doesn't mean go short. Duh, Chris. That means go to cash. Sell out of the buy signal right here and go to cash. Not grab the buy signal, run it up, and then when you get a sell signal, sell short. So this isn't the very best example, but of course, Outlier's got a lot better on the buy and sell signals since that point. But that's exactly what I was doing wrong, which is why I then worked through, came up with the master key, and the master key is now evolved to the Outlier 9. You get all these in your favor, you're going to be golden. I can't guarantee anything, but I can guarantee one thing. You'll be trading in the direction of where the stock is going. I can't guarantee the outcome, but at least you'll be in the right direction of the stock that's going. Okay. So Tim asks, when you enter in your spreadsheet, you enter the original buy and all rolls into one trade, not counting each one as a trade. Correct. Yes. So in order to do that, it allows you to see where your actual P&L was, right? So we're saying that we went from, like the 100 strike to the 105 strike to the 110 strike. So it's like my original debit, that won't change what I paid for it originally. But then I took in a credit on the first roll. I took in a credit on the second roll. And then I took in a third credit when I sold it out. And of course, in order to maintain how that trade tracked, it's easier to just put it all on one line. So in your exit point, in your exit price, that's where you put in all the credits you took versus all the one debit that you took when you originally put on the trade. Great question. Albertone says, is there a rule to halt and close every trade at extreme market breadths between 10 to 90 or 90 to 100? That would have saved the golden ticket from the Trump green tweet candle. I don't know. I mean, I don't put on new trades if they're greater than 90% on their own heat map. But I hadn't, honestly, if market breadth is going up, that's what I want to see. If more stocks are being bought, that's going to help push up my stocks that I own. Let's see. Amy, yes, follow-up question. So sell signal with a green background is take profit. Precisely. A sell signal on a green background means to sell back to cash, not a sell to short. And boy, did I lose a lot of money. Thanks, Chris, for the free education. You're welcome. The way that you can pay me back is by telling everybody you know. The way you can pay me back is telling everybody you know. By the way, 516 people are watching this right now. I want you to have some perspective on this. I have been doing this online since 2018, I think. All the receipts are on my YouTube channel. This was happening for years. And I'm really sorry that we didn't meet until this year. Because honestly, nothing has changed. I mean, tweaks here and there, but we've been doing this for ages. So I don't want you to ever say, Chris doesn't know what he's talking about. Chris hasn't been through it all. I've been through it all. And every receipt is on YouTube. So you're more than welcome to go watch the old ones. Gary says, when does Outlier update? Every night. Every night. I think it's like 10:30 p.m. East Coast or West Coast time. But on weekends, it's Sundays at 10 p.m. or whatever it is. But it's overnight. What do you mean when you say heat map? So Zach, hang on, dude. I got you. But pay attention. This right here is the fear and greed heat map for the stock. This right here is the fear and greed heat map for the sector. That's what we're looking at here. It goes from an extreme value of 0 to an extreme value of 100 and everywhere in between for the stock, and the same for the sector. This will tell you if it's getting more greedy or more fearful. This will tell you if it's getting extremely greedy or extremely fearful, right? Now, our objective here is to buy it as it's getting more greedy. And that is not the same as where the price is at. I showed one this morning, and maybe it was GM. Let me zoom in. Maybe, no, I forget which one it was, but it was, maybe Palantir is a better example. Hang on. Palantir, this will do. Right. So this price right here on this candle, let me do a horizontal line. Yeah, that'll work. This price right here, it was getting more greedy at that time. Then the same price right here, it was getting less greedy, more fearful. Came down quite a lot, came down quite a lot, came down quite a lot. And now it hit this point. It's getting more greedy, less fearful. Came back pretty close to that point and continued to get even more greedy, right? So fear and greed is not necessarily correlated with price, but you want to be buying it while it's going up in price, while the greed is going up. Bobby's World says, I've tried to tell people about you and Outlier. They're not interested. Richard Dennis was right. Bro, of course, this isn't sexy, right? When I tell people that you can save time, make money, and start winning with less risk, first off, they think I'm a scammer. Just facts, because nobody believes that anybody would do this on YouTube for free. But also, they don't think that they can do it. They aren't mentally ready for this, Bobby, right? If they understood that people can beat the market, incredibly market excessive returns, very excessive market returns, they don't think it's possible. So therefore, they don't want to believe that it can be done, right? People said the same thing about electric cars, right? They don't think that electric cars are going to be viable. Elon Musk had to fight through that. And now Tesla's like mainstream, right? It's the same. It's the same. Now, we're changing the world, but I can only do that with your help. So if I've helped you save time, make money, and start winning with less risk at all this week, do me a favor and tell somebody else. And be sure you click one of these 2 videos. Have a fantastic weekend. See you back here on Monday.